Hey, how you going? Welcome to a quick Sunday Dragon Tail trading vlog. I just thought I'd share some thoughts on crypto versus inflation. My thoughts, these don't come from anybody else except myself, and well, if you talk to me for a while about crypto, you'd know I'm not a big fan of it. However, some of what I'm thinking, I feel like it's playing out in the market right now. Obviously, as you can see here on the screen, this is Bitcoin versus USD. This is a 4-hourly chart. It's it's crashing overnight. It's been crashing. Well, let's go back to the 21st of April. It sort of peaked out there at 42,000, and it's been sort of cascading down ever since. It is what it is, but in my view, it's still what you would say is a risky asset. It's not a service asset. It's not something that that's driving the world economy right now. It's a speculative asset or investment, in my view. Playing out here on the chart in the last month, at least, reflects my thoughts on inflation versus crypto, meaning that as the cost of living increases, the risk appetite and the available cash people have to actually buy crypto, and thus push the demand, which pushes up the price, decreases. So the less people have cash to invest in crypto, that's what the market is. It's buying versus selling. So people selling off their investment, cash out to just do stuff in life, whatever that stuff is, just live, versus people who are investing for the future. So what this chart tells me in the last month is that people are not so much investing in the future via crypto. They're just cashing out to live, do whatever maybe they're living their dreams, or boat, or whatever. They're just cashing out. So I'm not here to tell you where I think crypto's headed, Bitcoin specifically, but yeah, it wouldn't surprise me if it touched the high 20s again before doing something amazing, like everybody who proops crypto wants it to do. Anyway, that I would summarize it by saying spending to survive versus spending to thrive. So right now, I think people in the world, in the Western world, particularly that are investing in crypto, are spending to survive, not thrive. I found an interesting chart, just to wrap this little point up, it's basically inflation since 2019 in the US, but this inflation in the US kind of sort of reverberates around the world, so it's valid to most Western economies. I'm down here in Australia, so it's kind of valid for us in Australia as well. But what you can see most predominantly, particularly through 2020, is inflation in the US was actually negative for energy. So it sort of had a negative peak, if you like, sort of between March, and then inflation kind of ticked up throughout 2021. I'm not going to get into the politics of any of that, but basically where we're at now, this chart's probably this is a Bloomberg chart. I got it off Cointelegraph. I'll leave the link in the comments, in the details, sorry. You can see that what is driving inflation. So this is a nice breakdown chart, and you can see it's called CPI, excluding food and energy. I'm not going to get into what that is, but yeah, essentially, it's goods, excluding food and energy. Goods, the price of goods and the price of energy. These are the things that seem to be driving the inflation bubble that's occurring right now. And the interest adjustments being made by the US Federal Reserve, and also here in Australia, the Reserve Bank, they're pushing it's up a smidgen, but it's not really going to touch the sides of what's going on here, not for a long while. So these things take a long while to play out in the market, but what will happen in a hurry is people's risk appetite will change dramatically. If investors smell that there's some issues, they're going to sort of begin to consolidate profit, consolidate losses, either which way. So for day traders like myself and hopefully you, there's always opportunity in the market, whether it's going up or down. That's fine. We want movement in the market, one way or another. Sometimes it's hard to understand why the market moves like it does, but I think this chart, more so than others, explains what's going on here. Is that the cost of living is going up, and specifically on this chart, I think if you look at the rise in energy in costs, or the costs of energy throughout 2021, shows you the pressure, particularly on crypto, which relies on mining operations to validate the transactions. So without validation of transactions on the blockchain, you don't have crypto, right? You don't have a functioning cryptocurrency. And so as energy creep up, some would say because in part due to crypto mining, but I don't think it's really touching the sides either on that level. Obviously these things become more and more expensive, and people are so the whole thing is just a big bubble of negativity around crypto. People want more cash in the pocket, and they also want a cheap way to mine it. And I've heard of people doing, they're setting up water wheels in the middle of in the middle of the wilderness somewhere, using the power of water to drive a turbine to generate electricity to mine crypto and crazy things like this. So I guess there's all sorts of things going on the side, but that's really, again, these are really kind of micro drivers of sustainability. They're not really, going to drive a global currency that's has billions of transactions, maybe not even per day, maybe per minute, maybe, I don't know, like if crypto was to be a viable currency, it would have to be the blockchain would have to be capable of processing massive amount of transactions. So given its huge demands on energy, and given the inflation of energy in the US, which is also reflected all around the world, that's why maybe savvy investors are looking at thinking, well, maybe now's not the best time, maybe. But that's just my thoughts. I have another chart here which sort of shows you back to 2010. Of course, nobody really knew about Bitcoin back in 2010, maybe the creators, but and a small sort of group of enthusiasts, techno enthusiasts. I first heard about it in 2020. I didn't buy because I didn't think it sounded like a sensible idea. So stupid me, right? I could have thrown a few grand in it and been, a squillionaire by now. But as you can see here, the inflation, the ensuing inflation on this is the US CPI, doesn't have any correlation to crypto at all. So, people thinking that crypto now because of inflation, because of the cost of everything. Well, no, it doesn't. It doesn't sort of pan out like that. Now, I guess you could probably adjust the price of crypto, so you could probably take out. You could probably do some sort of normalization here, so that you just sort of represent peaks and troughs, maybe peaks and troughs against the CPI. Maybe would be able to show you some kind of correlation, but on a high level, I would say no. I would say because this particular chart only goes up to 2020 by the look of it. It says as at May 2021. So of course, since May 2021, things have gone a little crazy. So you can see, if you go back to this inflation chart, May 2021, inflation's ticked up by at least 2% since that time. So and crypto's fallen. So what you might want to say here is more inflation, less crypto. So, but again, we don't have a lot of data here to support what I'm saying. It's just a feeling I have that, again, just to repeat that, people at the moment are spending to survive, not thrive. So, and when people spend to thrive, that's when things like gold and crypto and the stock market, they're great to be bullish on, because they're really kind of driving up the price. But at the moment, I don't feel like that's happening. We'll see. I'm sure there's a bunch of stalwart crypto faithful who just want to hang on to the stuff for as long as they can, even if their investment decreases by orders of magnitude of 10 you still hang on to the thing because they're just the party faithful when it comes to crypto. That's fine, that's cool, that's your thing, your money. For me though, I'm a little more pragmatic about how I feel about these things. I have a feeling though that if the US government or the US Fed is able to get a handle on inflation, I don't know if they can. They really have to do some big things which seem to go against their current sort of economic policy and political appetite in the United States right now. The stuff they'd need to do would probably anger a lot of people, let's put it that way, to put the inflation genie back in the bottle. If they were able to put the genie back in the bottle, crypto would probably rocket, as people would get excited about it. They'd be looking for opportunities. Hey, I've got all this cash in my pocket, or my bank account as it were, and what am I going to do with it? Crypto's going up. Yeah, I'll buy some more crypto. It's a herd mentality. People follow the herd will follow the shepherd every time, and if the shepherd is climbing the mountain, they'll want to climb the mountain with the shepherd. So we'll see what happens. That's just my thoughts on crypto. I'll just do a quick rundown of charts on March 4, just so we can see where the market is as it's Sunday the 8th of May. Right, so what do we got here? We got AUD USD. So AUD USD kind of ticked up from the 3rd of May through to the 4th of May. It was looking great. There was an interest rate rise, federal interest rate, cash rate rise in Australia of 0.5 basis points. The market rallied, but then it seems to have crashed since then. So yeah, it was kind of a short-lived rally. Again, I think inflation is killing people, as well as an upcoming federal election and the likely successor to the current government. Kind of, well, they're proposing a lot of, how can we say, they're proposing big government type policies, and big government is never good for the private sector, because big government means more control by government, less control by private people. So I think investors are really kind of backing away from the Australian dollar right now, just to see how the political landscape is going to play out over the next few weeks into the election, and then following the result of the election, people will have to make a decision. I mean, some of the proposed policies of the political party who's favourite to win, which is the Australian Labor Party, is that they want to socialise housing investment. They're proposing to contribute 40% of the cost of a new house for I assume first-home buyers, but it could be everybody. But that that socializes the housing sector, and the housing sector is so big in Australia that will really rock the economy. I'm thinking it will be a bad thing. I'm thinking it will actually inflate the housing market. I think people will say, wow, the government's throwing money away, so I'm going to just whack another $200,000-300,000 on the value of my house when I sell it, because the government will cover that anyway. So about that, I think the market looks a bit worried about that too, so I think there's a lot of uncertainty in the AUD right now. Back to Bitcoin, as we just discussed. Yep, it's in a bit of a free fall at the moment. I'm doing a cheeky sell there, just playing on the lesser time frames today, just testing out my new indicator, which was called Dragentail, and then Crocodile, and now it's evolved into the teeth. So I'd probably be calling it Dragon Tooth for now. So maybe the next inception will be Dragon Fire, but right now I'm at the mouth, and yeah, these teeth are very sharp. The pink, if I can draw, let's see if I can draw a line. Yep, I can. So up here you can see the pink diamond is your earliest sell signal, and the down here is your earliest buy signal. So it's getting very sharp, hence the teeth analogy. And as you can see here, the latest pink diamond on H4 was about 8 hours ago, so I'm a bit late to the party, but just playing around, why not? Life is short. Euro USD. Okay, so unlike Bitcoin, Euro USD is just sort of bouncing off a bottom, if you like. It's going sideways here since the end of April, pretty much. Maybe also in a holding pattern, perhaps. Could be a result of the ensuing strife in the eastern part of Europe. So I really don't have much to say about that, but yeah, it doesn't. Maybe on a short-term time frame, she could make some money. That just looks very sideways. And doesn't look like recovering in a hurry. I guess a resolution of the conflict in Ukraine might give it a little more positivity, but right now it just looks like a very sideways chart. Alright, what's this? US 500. So, yep, this is a reflection, I guess, if you like. This is a CFD of the top 500 stocks on the New York Stock Exchange. And yep, again, we see the same kind of hump, you know, like from the 4th of May, but then it's sort of fallen off now to now. I don't know why, but yeah, you can see a decline. And again, I think this is also due to inflationitis. I think these charts have fallen because, you know, people are spending to survive. They're not spending to thrive, and so that's on US 500. Now, if we go slip over to US dollar, on the other hand, versus Japanese yen, it's looking quite strong. And I'm not quite sure if it's a buy or a hold and a wait and see, but the teeth indicator is saying buying. Interesting thing on this, if we go to the monthly chart, or actually we'll go to the weekly chart, back to 2019. We'll go. Let's go back in time and just let some data load up here. I always thought this was high, but then I looked back in time, and if we go right back in time, we'll see that this pair, this USD JPY pair, historically was much higher than where it is now. But we need to go right back to see that properly. So I'll just let this chart load up. It's going to look a bit weird because it's downloading data. I should have done this before. Alright, so let's, yeah, so there you can see. So back in 1980 through 1985, so from 1985, Japan. So essentially what this is saying is that US dollar was worth about 260, 200 and, yeah, about, let's say, let's average it out at around 250, yeah, let's just sort of take a 240 yen per US dollar. So at the moment it's 130 yen per US dollar. Now it's changed in that time, so I don't know if this is a fair comparison to make from the 90s, sorry, the 80s to now. I don't think it's a fair comparison. It's just an interesting observation. Now, the last time that the US dollar was higher against the yen than it is right now was in the mid to late 90s. So again, that's, that was 26 years ago. So that's a fair while ago. So, and lots of things changed. The US economy's changed. Inflation in both countries has changed, and in terms of trade and all kinds of policy things have changed in that time. I wouldn't place a lot of stock in that, but it's kind of interesting how how it is actually rising right now. But historically, as you can see, it's not like it hasn't been this elevated previously. All right, back to H4. Cool. All right, and the last one, gold. So looking at the H4, the 4-hourly chart for gold, you can see gold is kind of reflective of Bitcoin right now. So again, in my view, that's probably due to the same appetite for investment versus appetite for just getting by, and waiting. Also, gold, of course, is traded heavily and bought and sold by many banks around the world. So, like the price of gold to me isn't overly reflective of anything more than just, opportunity. Opportunity taken by people with a lot more cash than you and I. We're talking big banks and hedge funds. If we do the same thing with gold, of course we can see that, from early 2000, back 1998, as we can see, gold was a few $100. Specifically, it was around $200 to $300 US. So to go from $200 to $300 US to them in the last 22 years ain't too bad. But again, a lot's changed. A lot's changed in that time. So yes, it could be seen as a great investment from then to now, but what's going to happen tomorrow, we don't know. So we just follow the charts. That's what I do, at least anyway. So I feel like your best bet in any market at any time is to have strong signal. I am a signal developer. That's why I have learnt the hard way many times, and so now I just basically trade the signal. I don't trade my theories, my ideas, my speculation. I just trade what's going on right now. That's the best thing to do, particularly when there's so much uncertainty in the world and so many people that aren't investing that could be investing. So the volumes, and so you have to be very careful in those kind of markets. High volatility, low volume. You need to trade the signal. I guess the analogy would be the same as a pilot flying through clouds or fog. We're basically flying on instruments here. We cannot rely on looking forward into the terrain tens of miles ahead of us. We just don't have that visibility. All we have is the instruments at our disposal, and we can just read what's happening now. Anyway, that's it for today. Thanks for listening. I'll see you on the next one. Bye.